3, 2, 1, 0. All engine running.
Hello guys, welcome to another episode of the Momentum Project. This is Rui, today your solo host, and I'm doing this solo episode. George is not with me today, and we will definitely miss him. Sadly, this will be a much shorter episode too, but I hope that some of the topics we discussed today will be of some use for all of you guys. So let's go. Today's topic, what's going on with the Mexican economy? This will be definitely an interesting topic for our listeners in Mexico or those who somehow do business with Mexican companies or business people right here in Mexico. So let's start with the Mexican peso, the Mexican currency. It has been for basically all 2022, the Mexican peso was one of the three most strong currencies around the world. We can just compare how strong it was with the Brazilian real and the Russian ruble. Of course, the Russian ruble has some, very stiff or very tough currency exchange controls and stuff like that from the crisis that derived from the invasion of Ukraine. So I'll put the, I'll classify the Russian ruble like a different creature here. But definitely what we see or what we saw is that both the Brazilian real and the Mexican peso were really, really strong last year in terms of their value against the US dollar, right? We also saw this with some other currencies in Latin America, of course, with some exceptions, because we need to also discuss what happened with Colombia and Chile. Both their currencies had huge depreciations against the US dollar, but we can explain that, let's say, with the local risk that the change in political regimes established for the international market. So both the Colombia and Chile cases could be explained more by what happened within those countries. And this is more related with political and social risks. But really interesting what happened with the Mexican peso, because I remember back in 2018 when the left-wing candidate, López Obrador, who right now is Mexico's president, won the presidential elections, like lots of economists, lots of, experts definitely believe that a left-wing government will probably have a negative impact on the local currency. And that's something that a lot of people believe, right? And lots of investors, lots of Mexicans from, like common citizens with few savings up to really wealthy families, even large corporations decided to invest more in US dollars to hedge against any possible depreciations with the Mexican peso against the US dollar. So, how is it possible that our currency kept so strong against the US dollar? And let me just give you some context about how impressive this is. Probably you remember that last year, 2022, the euro, the European Union official currency, made a lot of headlines because for the first time in a long, long period, the euro achieved this concept of parity with the US dollar. That means that for many years, with €1, you could buy more than $1. So €1 was worth 1.2, 1.3 US dollars. And for the first time in a very, very long time, this is a horizon of decades, the euro was really cheap in terms of US dollars. So with €1, you could only buy $1, right? And what happened afterwards, it was even more impressive. it got to a point where the euro was worth less than $1. So just imagine that, and it was impressive. So, of course, what we saw for a long period in 2022 is Americans, taking advantage of how cheap the euro was against their currency, and they started buying real estate in Europe. A lot of traveling, a lot of tourism from America to Europe because it was really cheap to travel there. So yeah, we experienced during 2022 a huge strengthening of the US dollar. The US dollar gained a lot of power, mainly as a consequence of the monetary policies from the Federal Reserve in the US. The Federal Reserve is the US central bank. So what happened there is that as the Fed, that's its name, the Fed, the Federal Reserve, started to increase the interest rates. This made it much more attractive to keep deposits and money invested in the US currency, and also, some quantitative monetary tightening, right? So during the pandemic, we saw the Federal Reserve printing money. That's a too simplistic way of saying it, but we want you to understand it. So basically, during the pandemic, interest rates were very low. That meant that the cost of credit, of loans, was very low. A lot of companies, businesses too, were taking loans to invest, to buy stuff, and that helped the economy to keep going. And at the same time, the monetary supply, the amount of US dollars in the economy was increased. So that also explained how the US dollar lost strength during 2020 and 2021. And of course, in 2022, as the central bank started to do the opposite, the US dollar gained a lot of traction and became a really strong currency again, especially when you value the US dollar against some major international currencies. So it turned stronger against the euro, the Great British Pound, Japanese yen, Australia's dollar, the Canadian dollar. So yeah, it was a major appreciation of the US dollar against most large currencies around the world, with the exception, of course, of the Mexican peso, the Brazilian real. So what happened with these Latin American currencies? First of all, we need to remember that both countries, Mexico and Brazil, already had great experience with high inflation. So something that is something which is really interesting is that during this 2022 period of, let's say that this inflation phenomenon really started back in 2021. We began seeing some clear signs of an inflationary crisis building. But if you read about a little bit about like the recent economic history of Latin America, most Latin American countries have consistently suffered from inflation, mainly due to a lot of mismanagement in terms of fiscal and monetary policy, corruption, the political crisis. So yeah, actually, there are governments, countries like Argentina and Venezuela that have huge problems with inflation. But what we saw with countries like Peru, Brazil, Mexico, and some others, that they were much quicker to respond to the threat of inflation because these countries already knew what to do. So they were much faster in their actions, especially from their central banks, and they quickly decided to increase interest rates and tighten their monetary policies. And in some cases, this was also supported with the fiscal policy, right? So this is really interesting. The developed countries, the developed world that experienced for almost 40 years what BlackRock calls the Great Moderation, a period in the developed world, which is basically, the US, Canada, Western Europe, Japan, and Australia. These countries experienced like really low inflation rates and really stable macroeconomic conditions for 40 years. So a lot of stability, prosperity. So they were not as ready for this inflation crisis. And Latin America was much more quick. It was much more flexible and they reacted quite quickly. So I believe, and I have read a lot about this, they were really smart about how to fight against the inflation problem. So, yeah, one of those reasons is related to the monetary policies that both Brazil and Mexico used. So, the current short-term interest rate for Mexican bonds, well, these are called CETES. So these CETE bonds, which are equivalent to the treasury bills in the US, are paying a huge, huge interest rate. So right now it's close to 11%. It's even a little bit above 11%. 11.06 was the last data I saw for a period of a year, investing just 1 year. So imagine how successful has this interest rate being for Mexico, because first you have a very resilient currency that has even gained ground against the US dollar, but then it's paying a huge interest rate. So it's really interesting. It's really interesting, and it's right now paying above the official inflation in Mexico, which is closer to, if we see the inflation for 2022, it's closer to 8%. So that's one reason why we see the strength of the Mexican peso, right? A country that has an investment grade sovereign rate. Mexico's credit rating, as with credit rates from these major institutions like Moody's, Standard and Poor's, Fitch, these credit rates help investors around the world to somehow measure how to helps these institutions to measure how safe it is to lend money to a government, right? So what we know is that, so in the case of Mexico, we have a country that with an investment grade, and it's a country with a strong currency and with really interesting or really high interest rates, right? So this is one of the main reasons that we could argue that the Mexican peso has been so strong against the US dollar. Of course, there is another major explanation for why the Mexican peso has kept so strong against the US dollar, and it's related, or we could talk about the concept of nearshoring, which basically means that foreign companies, US companies, European companies, Asian companies are moving their plants, they're moving their production or part of their added value process to Mexico. So this is really interesting because, you know, there has been a lot of news related to the uncertainty that the current left-wing government, López Obrador's government has been creating some uncertainty for foreign investments. There have been some even controversies related to the free trade agreement between the US, Mexico, and Canada. And we know that foreign perception in terms of investment, at least about Mexico, are not as good as some previous governments. But what's really interesting is that today the markets lots of these companies prefer now the uncertainty of the Mexican government and the uncertainty of conditions, especially related to security and safety, with all the crime organizations and the crime crisis Mexico is currently suffering. Well, all these companies prefer that uncertainty to what happened with China and the uncertainty with, Chinese authoritarian government, the crackdown against some major public companies in China, the COVID lockdowns. So, and of course, all the logistic problems that escalated during the pandemic. A lot of businesses, a lot of investment prefers now Mexico. So these two factors, high interest rates and the nearshoring, more and more companies deciding to move their production capabilities to Mexico, are helping the Mexican peso to be so strong. So yeah, this is a really interesting thing. So yeah, first of all, what we see is that even against some major predictions and something wild was that back in back in October 2022, Moody's, one of the, big consulting firms, one of the major credit rating companies in the world, said that they were expecting a big depreciation, a large depreciation for the Mexican peso against the US dollar, something around the 20%. So that right back then, that meant that they were expecting the exchange rate going from 20 pesos per dollar to something around 24 pesos for $1. And what's happening, it's really the opposite. As I told you earlier, for the first time in a long time, $1 is worth less than 19 pesos. So really interesting. So that's something that politically sounds great. Nevertheless, the Mexican peso even if the Mexican peso has gained some ground against the US dollar, the inflation problem has been serious too here for the peso. So in terms of purchasing power, things are not so great. So I don't think it's really such a victory to be bragging about, but it's great for headlines, of course. The political logic, it's most times above the economic logic, at least in the short term, I believe. I don't think that this could last a lot because, Mexico is a huge exporter. The exporting machine in Mexico will start to suffer from this expensive peso. A very strong peso, of course, is not good for export. So I think that as soon as the Banco de Mexico, Mexico's central bank, starts to see some clearer signs of the Federal Reserve, lowering its pace to increase the interest rates, they will quickly do the same because there is no way that these really high interest rates in Mexico will not damage, the economy. So I think that they are starting to feel some pressure about the economic impact of making credit so expensive. Because of course, when you have such high interest rates, this is awesome for those saving money, but for the general economy, especially when you depend on credit and mortgages and loans to keep the economy moving around, you start to feel the pain from these higher interest rates. So I think that for sure, I mean, I cannot, that's not proper to say, but I think there is a really high chance that we will see interest rates start to drop in Mexico in 2023. I think there is a high probability for that. And in terms of macroeconomics, we don't see any major changes this year. Of course, we depend a lot in the US as we export more than 80% of Mexico's exports go to the US. So, of course, a recession in the US will affect us. At the same time, Mexico has shown some resilience during certain crises, especially the most recent one was the pandemic, and exports were quite resilient. So we don't see any major changes this year for the macro conditions in Mexico. Probably some sort of recession, but nothing too deep. It seems it's going to be some kind of mild recession, and probably this will push the Banco de Mexico to lower the interest rates. But what's really interesting is that this year is opening the way for 2024. 2023 will start to see a lot of dynamics related to presidential elections in 2024. So we do believe that risks are building up, towards 2024. And that's what I think that is the most important thing to look in the not so long term. 2023 and 2024 will be really focused on what happens with, the US in terms of economics, the relationship between Mexico, the US, if there is any recession there, and how could that affect us. And of course, both Banco de Mexico and the Mexican government will do as much as possible to avoid any strong damage from a recession in the US. But I think that most decisions coming from the government during 2023 will respond to a political agenda, and that's to try to keep the official party Morena in power in 2024. So yeah, that's going to be a really big topic in the coming 18 months. But something that it's also worth noting is that a lot of money seems to be arriving to Mexico for what I previously mentioned, which is the nearshoring. And this is the topic that I like to use to close today's very short episode. What's happening with China, the relations between the US and China, and how, the Chinese people and Chinese businesses and industries have suffered from COVID, and what seems to be a stronger, more authoritarian government, less open to the world, Communist Party government. This seems to be the perfect opportunity for Mexico. And as this is a podcast for entrepreneurs and founders, business people, business women and men, we believe that those in Mexico should be really aware of the opportunities coming related to the nearshoring, related to all those resources, all those companies, industries, added value chains that are moving to be, closer to the US. So that's what I like to say, that even with the high political uncertainty in Mexico, even with, all the problems related to organized crime, safety and security, there are major opportunities coming for Mexico, and it's free trade agreement with the US and Canada. And a lot of businesses, a lot of individuals, people will benefit from this major shift in in geopolitics and like economic structures around the world. This could be a great opportunity for Mexico and those doing businesses right here, especially looking towards the US. That's the positive thing here, that even with so many sometimes tragic or negative news coming from the country, there are also major opportunities developing. The US is still the largest consumer market in the world, and Mexico has a tremendous opportunity, tremendous strategic capabilities to serve that market. So if you are doing anything that could serve the US or the Canada or the American or Canadian markets, the US or Canada, you should really focus on what opportunities you could find there. So that's it for today, guys. Thank you so much for listening to this episode. I hope that this was not as boring as I feared it could be. I promise that George will be with us on the next episode, helping me here with my clumsy English. But if you made it through all the episode, thank you a lot for that. Please write us and leave any comments if there are any topics that you would like us to discuss, and again, keep pushing hard. We're just starting 2023. Sometimes we listen or hear a lot of bad news and talks about recessions and ongoing wars and inflation, whatever. Remember that most of what you experience today in your life is much more related, it's much more affected by the decisions that you are taking. So focus on that, focus on what you have at hand, and try to work hard to build your life's projects, to achieve your own personal goals and objectives. And remember that you have the power to take great and excellent decisions that could, in the short, medium, and long term, change your life. So, yeah, I'll invite you to keep positive and working towards what you want. So, thank you guys. See you soon. Bye.